Hello everyone, welcome to CI Academy YouTube channel. On this channel, I share useful tips on how to become an exceptional trader, how to improve your trading psychology, and I also teach various working strategies and technical analysis concepts that will make you a profitable trader. If you are a newbie or an amateur and you want to learn technical analysis from the scratch, or you want to upgrade your trading strategy, make sure you smash the subscribe button and also turn on post notification to get notified first anytime I drop new content. Thank you.
So today I'll be teaching you about risk management strategies that I've been using over the years and that have been working for me, and that I also learned from other trading gurus over the years and I've been using. So a student of mine actually reached out to me and said, Ojisne, I'm a very good analyst. I understood all the concepts you've taught us well. I've carried out all my strategy and I've even carved out a particular trading strategy, or like an edge for myself that I used to analyze the market. I normally post banners like of greens, and my wins are more than my losses, but still yet I'm not profitable. Now I smiled, and using my medical skills and also my years of trading experience, I can actually I made a spot diagnosis and I made my differentials. I was able to let him know that, bro, the problem you have is not actually that maybe from your analysis. I know that his problem is actually mostly a psychological problem. So I now told him, you have a know-it-all attitude. You are too reluctant on your market. You are too reliant on your market analysis skills, and unless you deal with that psychological barrier, you can't succeed in trading. The only way you can succeed in trading is to make risk management your friend. Risk management is the companion of all successful and big traders out there. I know some people, if you are talking about risk management, having a risk management plan is just like a two words to some people. They just risk management is just like a word to some people, until you lose a substantial amount of money to the market blindly and you now later find out the truth. You will not actually know what risk management is. Risk management is very, very crucial as a trader. If you want to become a big trader, you must have a risk management at hand. You must be able to manage your risk. You must have mastered the risk management aspect of trading. And not to waste much of our time, and also in order to pass across what I have for us today, I'll be sharing with you some of the risk management tips that I know. Now, some of the risk management tips that I know, first things first, is to have a plan. There is a saying that if you fail to plan, then you are planning to fail. You must have a plan. You must have a target. You must draw a particular plan. Okay, I'm now into trading. What do I want to achieve from trading? How do I want to achieve it? All these questions, you must be able to answer it. How do I achieve this my target? What will I do to make this target? What should I do to make this target? Where should I go to make this target? Which skill should I acquire to make this target? Is this target actually a reasonable target or an unreasonable target? All these questions, you must be able to tick all those questions before you can actually say, okay, let me now start, let me dive into action. A lot of newbie traders out there are getting it wrong and are failing and are getting fed up along the way, or dying along the way as a trader, because they want to become like Jeffrey Benson overnight. They want to buy that dream car overnight. They want to become like Abby Forex overnight. No, it took them years of experience, years of pains, years of gains before they can become what they are today. And is another thing that I want you to know is that there are more to what they are doing than trading. Some of them, yes, they are traders. Majority of what they are doing is trading. But one thing that I want you to know is that they have diversified their portfolio. They have other things that they are doing that are generating money apart from trading only. So you are just coming up as a trader, I don't expect you to rise to the top or to quickly start buying that Lamborghini, to start buying that Range Rover like them. No, it will take you some years or some months of dedication and consistency before you can actually find an edge and also become profitable as they are. Finding an edge is not something that is easy like that, and also being able to master your skills and also being able to tame your psychology. It's not a day's job. It's not a month's job. It takes months. It takes years. So I want you to calm down. One of the trading risk management strategies is that you calm down. Patience. Apart from plan, when you have the plan set up, okay, by this so year, I want to make this so amount, or I want to be able to achieve this so thing. That's a plan. Two is that how do you achieve this plan? So all those questions you have to take all the why questions of that particular plan. The next thing is that you have to be patient. You have to be patient. Great things take time. You have to be patient. Okay, if you actually draw a particular goal and a solid goal, you know that is a long-term goal and is a solid goal. A solid goal is always a long-term goal. To achieve it, you have to walk through it before you can get there. Skyscraper, you can't just build skyscraper from the top just like that. No, it takes months, it takes years before you start growing, building from the first floor to second floor to third floor to fifth floor before you get to 50th floor, 60th floor, like that. Do you understand? So you have to be patient. You have to be patient. Then after patience, and the next thing that I still want to advise you on is that you understand the concept of trading. Understand the concept of trading. Understand everything about trading. Trading is not only about knowing how to analyze the market alone. No, trading involves patience. Trading involves psychology. Trading involves risk management. Trading involves discipline. Trading involves integrity. Trading involves a lot of things are involved in trading. So you have to understand trading in its entirety. Do you understand? So that one too, you have to understand that one too. So you have to understand that trading is a waiting game. Trading is a waiting game. You only trade when your edge is present. That all top successful traders, they wait for their edge to be present, then before they put on the trade. Do you understand? So you won't get rich overnight because you are trading. Trading is about discipline. The money will follow. Once you are disciplined, the money will follow. So trading is about discipline. Once you are very disciplined, there's no how. Sooner or later, the money will follow. Big traders can be likened to a sniper. You know, if you watch movies very well, you know that people that shoot sniper, that use the sniper gun, they will spend most of their times targeting, waiting for their target, for the right target, waiting for when the target that they are looking for is actually in sight and in position before they actually release or pull the trigger. Do you understand? Because they know that anything, if they miss the target, things will go wrong and they might be detected and they might be killed. Do you understand? So big traders are snipers. And what made them snipers is because they've actually mastered their game very well. They've have their edge. So they now wait for their target. They wait for when they see their edge. They wait for when they see their signal. If there is no signal, they don't just trade. Don't be like a machine gunner that you just shoot everything. No. You wait for your target. Then when you see your edge, when you see what you used to trade with, when you see your signal, then you know what? You pull the trigger. So you see that snipers, most of the time is that they spend most of their time waiting for their target, and at the end they will be rewarded. So another thing that I want to advise you on, which is still risk management, is continuous learning. Trading involves continuously. You have to evolve continuously. So as the trading is evolving, you have to be moving with the trend. You have to be moving with the trend. So you must continually be learning. So continuous learning. Then another thing is record keeping. You must have a journal. Okay, when I saw this particular trade at this particular time, X equals to Y. So therefore I long. When you see that thing again, when I see X equals to Z, I still long. When I see R equals to W, I shorted. Do you understand? So you will be keeping the track record. Then during the weekend, you now go over it. Okay, which one actually played out, which one did not play out. When you actually have that particular journal, you'll be able to segregate and know which particular strategy is actually working with your own personality very well. Do you understand? So another thing that I want you to know is that trading is a personal game. Trading is a personal game. Your mentor will teach you. Your mentor will teach you that, okay, this is how to trade, this is support, this is resistance, this is order block, this is breaker block, this is break of structure, this is how to long, this is how to short. But you yourself, you need to sit down. You need to sit down and look at it that, okay, if I see this thing is long, but does it actually work for everything? You have to sit down by yourself. Sit yourself down. Study hard. Trading, nobody will teach you trading. That's one thing I want you to know. Like, they would show you that, okay, this is how it is being done. That's the technical analysis aspect. But the psychology aspect, the risk management aspect, and the trading particularly, you are the one that will teach yourself by yourself. So you sit down, and it's not something that 2 weeks you are done, you are like, okay, I want to start trading. No, you can actually use 2 weeks to learn all the concepts around to learn everything about the concept you want to be using. Then you now sit yourself down and start backtesting. Check various charts, check a lot of charts. Okay, does this thing respect it? Does it respect it? Does this respect it? That's what we call backtesting. Then you now go again to forward test. Forward testing is that, okay, after you've done a lot of backtesting to check if those concepts actually work, then you now go to forward test. Forward test is that you now analyze the market in real time. Then you now wait for the market to play out. Did it play out? If it played out, fine. If it didn't play out, you now look for what made it not to play out. Then you learn from your mistake. You should backtest for 2 or 3 months. When you do that, okay, you will have gained some confidence. Trading is also involves about confidence, because if you don't take trades, how will you know if you are actually improving or you are not improving at all? So trading involves what? Confidence as well. So you have to be confident in your analysis. You have to be confident in your analysis. Do you understand? So that one too is part of trading. Now, all these risk management tips that I'm giving you, please, I cannot mention, there are a lot, and that's another thing that I've mentioned: continuous learning. You learn some from my page. You still check out some people's page. You are still going to learn more. So learning is a continuous process. You keep on learning. But I'm very sure that you've actually gained 1 or 2 things from all these things that I've said. So another thing, risk management tips that I can give you is that know your risk tolerance. Know your risk tolerance. A lot of us used to compare ourselves with big traders out there. Jeffrey Benson can lose $20,000 in a day and still be all right. Why? Because he knows that he can still later make it, maybe tomorrow or next tomorrow. But if someone like you, that you are just starting out, lose $20,000, you can go bankrupt. You can go to jail for that. Do you understand? So know your risk tolerance. Some people's risk tolerance is $10. Some people's risk tolerance is $20. Some people's risk tolerance is $1,000. So know your risk tolerance and play by that risk tolerance. Make sure that you work by that risk tolerance. Some people's risk tolerance are very minimal, but they will not want to. They will, because they are actually looking up to someone, they will be comparing themselves with that big trader. No, you must know your risk tolerance. Knowing your risk tolerance is a very good risk management tip. Please know your risk tolerance. If you are the type that, what I meant by risk tolerance is that, okay, if you lose $10 today, can you still sleep comfortably? If you lose $20 today, can you still sleep comfortably? That's your risk tolerance. So know your risk tolerance before you start out as a trader. Another thing is that always use stop loss orders. Always use stop loss. Don't be too confident. Don't be too reliant on your trade or your analysis. Always set stop loss. Market can be manipulated at any time. Anything can go wrong. Your phone might switch off, or anything. There might not be network. You might actually sleep off by when watching your trade. So always set your stop loss. Another thing is that always use your take profit. Don't be too greedy. Don't be too greedy in the market. Always set stop loss as well. always set stop loss orders, always set stop loss. Then another thing is that always limit the use of leverage. Over leveraging kills, because let me cite an example. If you are on a trade and let's say you long BTC and BTC is down by 5%, but you are using 20x leverage. For BTC to, before you can liquidate your account, it means the BTC trade went down by 5% against you, because 5% times the 20x leverage is 100%. So before, and 100% means that what, your money has been liquidated. But someone that is now using 100x, BTC will just go on what, 1% drawdown, and then your account will be liquidated. What if you set 20x leverage and BTC did like 20% drawdown? That's 2% drawdown. 2% times the 20% times the 20x, that's 40%. Then the BTC now reverse back. You see that you will not have been liquidated before you now later be in profit. So always limit the use of leverage. One thing is that over leveraging kills. Then another thing is that what, you avoid emotional trading. And always prepare yourself for the worst. If you check some of my YouTube videos that I've made before, I've actually talked about what, trading psychology, where I talked about that what, anything can happen in the market. So you must prepare yourself for the worst. And also what, avoid emotions. Don't put emotions in trading. Having fear, greed, anxiety, adrenaline rush, all those things are not compatible with trading. If you want to become a big trader, if you want to become a successful trader, you must have one thing at the back of your mind. Number one is that what, trading takes time. Always think on the long time. There's one day with consistency and hard work, and always showing up, your big day, your big payday, your cash out will come. That's one thing that is certain. It is certain. If you are just starting out, don't expect that you just blow in one overnight. No, it takes time. All this Jeffrey Benson that we are seeing, all this Abbey Forex that we are seeing, it takes time. They've been trading for years before they actually finally blow. Do you understand? So please don't put too much pressure on yourself, and believe in the process. Believe that trading will change your life. Trading has changed my life. Trading is changing people's life, and trading will change your own life too. Thank you very much, everybody. So if you enjoy my video, so please kindly click on the subscribe button, and also turn on post notifications for more videos that I'll be dropping. Thank you very much. See you later. Bye.